Hello, my name is Michael Glass from eMediaTradingCoach.com, and we're going to talk about a couple of disclosures before we begin our video. Any simple stocks that we mentioned during our presentation should not be inferred as a trading recommendation. You have to determine on what any form of investing you choose, stock, forex, futures, options, whether or not that risk that's involved, that risk of loss, is suitable to your risk tolerance. Any back testing that we do is just to show a particular strategy. Its future results are not guaranteed. And in the end, any investment decision you make is solely your own responsibility. Trade at your own risk. So let's begin. We're going to talk about what happened in the past week. This is Saturday, October 30th, 2010. And some of the key events that happened last week was that our Dow Jones and all major indexes basically were unchanged for the week. Some rose fractionally. The Dow Jones fell fractionally. So overall, we held steady for the week. The events of the week really didn't prove out to be a catalyst. If we remember from last week, we talked about the fact that there were no key earnings to be released and no real economic factors. Some of the consumer sentiments didn't have the effect they were hoping for. The Dow Jones did stay above 11,000. That's certainly a psychological boost. On the S&P, 4 out of our 10 sectors rose, with the biggest one being materials. Third quarter earnings still proved to be strong, but again, we had no big boys last week. This week we had 80% beat, 60% beat on revenues. And the only really big corporate news we had was that IBM announced a $10 billion share repurchase program. And again, on the economic front, Q3 GDP did show a growth of 2%, which is bigger than the 1.7 of Q2, but not enough to spur any buying. We were hoping to see that. It didn't happen. Existing home sales did rise 10%. The dollar fell fractionally. Unemployment had a little initial claims on Thursday had a little quick reaction, but didn't really pan out. And so what we saw for that this past week was big swings up and down, and then basically each day ending the day unchanged. Now coming into this week, we see a little bit of the same, especially on the earnings front. On the earnings front, we have no big companies. Maybe MasterCard will say something about the consumer, but overall, we don't have any really market-moving companies. However, on the economic front, we do have some things that can move the market. Now, I have an asterisk on Tuesday, not because there's an economic release. We do have the beginning of the FOMC meeting starts on Tuesday, but of course, we all know November 2nd, Tuesday, will be the beginning of the elections are on Tuesday, and certainly there's been a lot of talk about that and what the market will do depending on who wins. So that should be interesting. Wednesday, we do have the FOMC. What they say about the rates not going to move the market as much as how they describe the upcoming round 2 of quantitative easing. Many were hoping for $1 trillion, a couple $1 trillion. Some were trying to kind of temper those expectations for several $100 billion. So what they actually say they're going to do will move the market. And then, of course, we have the jobs numbers, ADP on Wednesday, non-farm on Friday, unemployment on Friday. So we do have some economic events, catalysts this week that should move the market. And as we know, earnings have been driving the market up. Economic, when they're the catalyst, has been driving the market down. So it should be interesting to see what we get. Because again, even if it's good news, they can sell the news. So let's go ahead and talk about some key technical analysis points. When we look at resistance, the point that we've been talking about for the past 3 weeks has been the April swing high. We had that move up for a year, and that April of 2010, the market paused and we had a pullback. So that's certainly going to be our resistance as we pause and potentially go higher. Also on the weekly chart, we have the 200 simple moving average that was exactly where we stopped in April and possibly where we're stopping right now. Support. Now we can say that the May 12 swing high, which was a resistance point, is now showing as support. We're basically hovering, snaking, intertwining with that May 12 swing high, and we'll look at that once we pull up the charts. Also, you can talk about the 10 exponential moving average as we pulled back from April and now we're moving back up. The 10 exponential moving average has been support, a little bit of the 20 also. And then our point of interest, we're going to drop it down here. It was a support, but now that the May 12th swing high is acting as support, we can now talk about this previous consolidation resistance points around 1130 as a point of interest if we were to break support. Let's go ahead and pull up the charts. So here we go. We've got the daily chart of the S&P 500, and we have our key lines here. For those of you watching, you know what they are, but I got to review. Our red dash line here, that is that previous consolidation that I had as a point of interest. We tested it on multiple occasions, and now that we've multiple occasions, and as we went through, it now acted as support. So if we were to break this blue dash line, which is the May 12th swing high, now holding up as support, possibly there could be a move to come down to either one of these lines. And then our April swing high is our resistance. That's our target from where we are now. I'm going to blow up the chart a little bit so it's easier to see. You can see resistance is gone now. And we can see a couple things. When we come down to the bottom, look at our indicators. They are moving out of the overbought range, starting to head down. So we're taking a breather. Again, we had no catalyst this week, and so the market paused. And but we did close. We're still holding above this May 12th swing high, so it is definitely support now. And we'll see what the results of next week's catalyst will do. Now I'll go over to the weekly chart, and we can talk about this 200 simple moving average on the weekly chart. We have our March 2009 low. We rallied for our whole year. Hooray, hooray! And then where did we die? Go ahead and blow it up just a little bit. We died right at the 200 simple moving average. We pulled back, and now as we come back up again, where did the market pause? We'll say pause for now because we haven't had confirmation, but it paused right at, and if you see that 200 moving average, the wick of this past week is where we paused. So that's certainly something to, and we've been talking about that, so you should have been aware and kind of cautious of that. And our weeklies are showing overbought also, and needing to head down. If I switch over to a monthly chart, we can see that the 200 moving average on the monthly chart is holding up as support. We can see our downtrend line that we broke. Possibly going to have to readjust that line momentarily. Our indicators on the monthly charts are showing that we do have more room to go. We're nowhere near overbought. We're kind of in the middle right now. So the monthly chart showing that we have more time. So if we think about our dual time frame trading, our long-term charts are bullish. So when our short-term, our daily, switch back to being bullish, then we have a signal. When they're not in agreement, that is a period that you may choose to stay out, or more importantly, trade more short-term versus investing or holding for a longer period of time. So right now, we do not have multiple time frame agreement. As we move on to the education portion of our video, we're using the book Trade Your Way to Financial Freedom by Dr. Van Tharp. Chapter 6, Understanding Expectancy. And here he talks about 6 keys to investment success. We're about reliability of your system, the relative size of your profits compared to your losses. I mean, we talk about this all the time. You can't have 3 minor profits, 1 tick, 2 tick profits, and then have a 2-point stop out. So that's important. The cost, what are your commissions, how often you get an opportunity to trade. It's one thing to have a great system, but if it only provides you an opportunity to trade once a day, once a week, is it a good system? What about the size? How much capital do you have? And position sizing, again, so it's often said that how you position size in and out of your trades can be the difference of you being green or red for the end of the day. And so when you look at this, the first 4 really have to do with expectancy. How are you defining your edge? How are you putting it so that the probability over time you're going to be more profitable compared to losses? Out of 10 trades, 7 are going to work, 3 are not. And that when you take the losses minus the profits, again, the profits are going to have you profitable. Which one is the most important? Certainly you would say none of them. You have to emphasize, put time into all 6. Yet we find that most traders only focus in on one on their day-to-day trading. So to help you on those 6 key elements, we do have our YouTube videos, our Facebook posts, and our Twitter posts, and of course on our site. And we have our E-mini coach instructional video series. We build the building blocks of trading. We talk about the key components to a trading plan, all the setups, all of that are included. And we actually have a bonus right now, a free coaching session included with the unlimited access to our videos. But of course, for coaching, we want to help you one-on-one, help you develop a personalized trading plan, the routines and habits of successful traders. Are great for our future traders. 20 free contracts. They've got intraday E-mini margins as low as $300. Check them out. And if you're going to trade, there's a reason why you see preseason. There's a reason why you see athletes out there before the game. You got to prepare to trade so you can deal with the pressures of trading. Because in the end, it doesn't really make a difference what indicator you buy, what system you're following, or if you can analyze a trading setup, if in the end you don't pull the trigger. And we at Mini Trading Coach are all about building a psychological capital to pull the trigger day after day. Thanks, guys, and I'll see you next time.